The stock market, also known as the equity market or securities market, is a centralized platform where buyers and sellers trade stocks, which represent ownership shares in publicly traded companies. It provides a marketplace for companies to raise capital by issuing stocks and for investors to buy and sell these stocks. Here's a brief overview of how the stock market works. Listed companies. Companies that want to raise capital by selling ownership stakes issue shares of their stock. These shares are then listed on a stock exchange. Stock exchanges are platforms where buyers and sellers come together to trade stocks. Examples of stock exchanges include the National Stock Exchange of India Limited and the Bombay Stock Exchange, the New York Stock Exchange and the Nasdaq in the United States, the London Stock Exchange in the UK, and the Tokyo Stock Exchange in Japan. Investors, individuals, institutional investors, and other entities can buy and sell stocks through brokers or online trading platforms. Stock prices. The price of a stock is determined by supply and demand. If more people want to buy a stock than sell it, the price goes up, and vice versa. Factors such as company performance, economic conditions, and market sentiment can influence stock prices. Indices. Stock market indices, such as the S&P 500, Dow Jones Industrial Average, or the CETS 100, are used to track the overall performance of a group of stocks. They provide a snapshot of the market's health and trends. Market participants. Various participants, including retail investors, institutional investors, hedge funds, and market makers, contribute to the overall dynamics of the stock market. Investors can make money in the stock market through capital appreciation and increase in the stock's price, and dividends payments made by some companies to their shareholders. However, the stock market also carries risks, and prices can fluctuate based on a variety of factors, including economic conditions, geopolitical events, and company performance. It's important for investors to conduct thorough research and understand the risks before participating in the stock market. Many people invest in stocks as a way to grow their wealth over the long term, but it's crucial to have a well-thought-out investment strategy based on individual financial goals and risk tolerance.